I've started the recording.
Yeah, just give me a minute to open the Excel. Too many Excels and tabs open on my laptop. Just a minute. Yeah, so I'm sharing my screen. Yeah, so we've already discussed banks, right, guys? So now we are going to discuss the sister industry of banks, okay? So, which is the NBFC industry, okay? So, this is broadly, what we'll cover. What is an NBFC? We'll again go through the bank balance sheet and the profit and loss statement just very quickly. Then we look at the differences between an NBFC and a bank. Then we'll look at what is a deposit taking NBFC versus a non deposit taking NBFC. And we'll look at the types of NBFCs that are there. Yeah. So, a couple of points. If you have questions at any point of time, just feel free to interrupt me and ask the question, and because I won't be seeing the screen of the call, so you have to like voice it out. And yeah, second is, since you already know about banks, you already know about 80% of what's going to be covered right now. So we are sort of going to do a refresher of that and then talk about the differences that NBFCs have. Yeah. Right.
Yes.
So we'll start a little with the bank balance sheet. Okay. So last time we saw the bank balance sheet. Since then, you guys have looked at a lot of bank balance sheets. I hope a lot of presentations, etc. So I hope that you now have a better feel for how a bank balance sheet looks like, right? So we have the asset side and we have the liability side. Okay. So this is a short quiz kind of a thing. So I have kept certain items, blank. Okay, and it is for you to fill up. All three of you, any of you can answer. Okay, so some things are filled up. So for example, in liabilities you have these three items filled up, and in asset you have these two sub items filled up. So wherever you have a dash, the item on top of that is the main item, and these are the two sub items of that, and there is another item on the asset side. So who can tell me, like, on the asset side of the bank balance sheet, what is the number one item that will come there?
Loans.
Yeah. So loans or advances, that's the language that they use, right? Because loans can be both on the liability side as well as on the asset side. So advances is technically the word that they use. Okay. And what else? Of which these two are the components?
Investments.
Yeah, investments. Absolutely. So when a bank raises money, it can either use that money to give out loans to customers, or it can use that money to invest. Where can it invest? It can invest either in government
Um,
securities, or it can invest in private securities, which is like, if Reliance comes out with a bond issue, a bank can subscribe to that bond issue, or a bank can even buy stocks. Okay, usually banks will never touch stocks because stocks are more volatile, so they restrict themselves to bonds of highly rated companies, right? So this is how the asset side broadly looks like. Okay, and of course you have cash and fixed assets. So I'm not even going at to those places. So fixed assets are mostly computers and building, etc., and you have cash, right? So let's look at the liability side. So the first item that you have here is tier one capital. Okay, what is the second item that you can think of?
Deposits.
Deposits is already mentioned here.
Casa deposits.
Yeah, casa deposits is mentioned here. So there
Borrowing.
yeah. So borrowings for a bank would be in what form? Is casa deposit a borrowing?
Yeah.
Yeah, so it is absolutely
Yeah.
right. So CASA deposit is already borrowing. So borrowing is a very general answer. I'm looking for more bonds is also a borrowing. When a bank,
Huh.
releases its own bonds, it is borrowing against those bonds. So borrowing is the general answer. So I'm looking at
One
more
would be
specific.
provisions.
Yeah, great answer. So I thought this one wouldn't be answered, but great that you got this. So provisions for bad loans. This is the last item. What is the second item? So we start from equity and then we move towards liabilities, right? So in equity, is there anything else that you guys can think of?
Yeah.
What is the CRAR ratio that you guys have been?
Capital adequacy also.
Yes. So capital adequacy. Pranav, are you there?
Yeah, I'm here.
Hi, hi. Good morning. Good morning. So, Pranav, thoughts on this? Like capital adequacy ratio में क्या क्या होता है? Uh, मतलब हाँ बोलो.
Reserves,
हाँ.
reserves and surplus.
Right. Reserves and surplus होता है. Reserves and surplus actually tier
Uh,
one capital का ही part है. So you remember, right? That
RWA.
nahi, RWA is okay. I'll go to RWA. I'll just first help Pranav with what he said.
Sure.
So reserves and surplus is part of tier one capital, Pranav, right? So you remember when you were filling up the yearly figures, there were two columns. One was CRAR, right, which is capital adequacy ratio, and the second one was tier one capital ratio, right?
Yeah.
So this is tier one capital ratio. This is
yeah.
tier one capital. And then you have something called tier two capital. And they together make the CRAR ratio. So the tier one capital is comprised of your reserves and surplus, okay? Mainly reserves and surplus. And there are some particular kind of loans plus some restricted reserves which make up your tier two capital. Okay. So together these two make up the CRAR of a company. So these two divided by the total liability of the balance sheet is your CRAR ratio. Yeah. Okay. There are two types of deposits. So one is CASA. What is the other kind of deposit?
Term deposits.
Absolutely. And what does that mean?
Term deposits,
Time to time, the ones which
FDs.
for a
Absolutely.
specific time. Yeah.
Yeah, absolutely. I mean, just any deposit which has a minimum maturity period. Like you can't withdraw the money at any point of time that you like, right? You will have to
Yes.
keep it for a certain period. So the CASA deposits are called demand deposits. Okay. And these are called, I think, term deposits. Okay. So yeah, so this more or less completes the bank balance sheet. Is there anything missing that you guys can think of that I have missed?
Mm,
If not, then we'll move on to the NBFC balance sheet. I think broadly this is right, right?
yeah.
Okay. So now I'll just copy this onto here. Now we look at the NBFC balance sheet. Okay. So the only difference, so what is the full form of NBFC? NBFC is a non-banking financial corporation. Okay. So it's a non-banking financial corporation. So it does not do banking, but it is created for the purpose of doing financial transactions, which is primarily giving out loans. So NBFCs also give out loans. The only difference is they are not banks. Banks can take your and my money as deposits. NBFCs cannot. Banks can, have checks deposited onto them. They can issue checks, etc., etc. NBFCs cannot. So that is the single biggest difference between a bank and an NBFC. That an NBFC does not have access to these two items. CASA deposits and term deposits are not a thing. So, for example, if IIFL Finance is there, you cannot open a savings bank account with them, yeah, because they are not a bank. They are not allowed to take your deposits. Okay, so this entire block of deposits is replaced by loans from banks or other NBFCs.
Oh.
So how do NBFCs raise money? They can either issue bonds or they have to take loans from other banks or NBFCs. Generally, they take loans from other banks. So if you're looking at a bank balance sheet in advances, okay, so imagine this is a bank, okay, imagine this is HDFC, and imagine this is IFL Finance. So on HDFC's asset side in advances, there will be some loans made to IFL Finance, which will reflect in this part of IFL Finance as liability on its balance sheet. Is that clear?
Yes.
Pranav, did you get that?
Yes.
Yeah,
Yeah.
great. So basically, that's the main difference, guys, that NBFCs are not able to take deposits and banks are able to take deposits. So, can you guys tell me what is the biggest implication of that? One guy is able to take savings accounts, current accounts, and another guy is not able to take savings and current accounts and has to depend on loans. So, can you think of one implication like how will a NBFC be different from a bank in the market in terms of borrowing lending?
They will have more lending than commercial banks.
More lending than commercial
I
banks.
mean, more borrowing.
More borrowing, correct. More
I
borrowing in the
mean,
form
more
of,
borrowing. They will have more.
yeah, more borrowing in the form of loans, Pranav, because even deposits are borrowing, right? So what you're trying to say is they will have more borrowing in the form of loans given by other organizations. That is correct. But I'm looking more in terms of their ability to charge a certain interest rate or, I'm looking at something like that. So, okay, tell me something. When you put your money in a bank in a savings account, how much interest rate do you get, or your father gets, or whoever has a bank account? How much do they get?
Is it 8-9%?
Uh,
4%.
s- Savings account? No,
Not
savings
not
savings.
savings is
You get 3% or 3.5%, or if the bank is feeling very
4%.
generous, then 4%. Yeah. So that's the rate of interest for a deposit account, right? Because why is it that like that? Because you can take out the money at any time, right? So if you have that flexibility, you get less interest rate. If you commit your money for a longer period, like in an FD, you get a better interest rate, 5%, 6%, 7%. Okay. So banks are able to raise money at those interest rates. NBFCs are not. They have to go to the banks and ask for a loan, or they have to go to the capital market and raise money through bonds. So, who do you think will be able to raise funds cheaper, a bank or an NBFC?
mm,
A bank, right? Because a
bank.
bank has access to
Banks.
deposits. Yeah, absolutely. So, a bank has your money, my money parked in its current account and savings account. So, current accounts, the interest rate is zero, savings account, the interest rate is 3-4%. Whereas any bank loan that an NBFC gets, it is at least going to be 8%, 7 or 8% in today's date, right? So one of the biggest differences as a result of this regulation that RBI has done, that NBFCs cannot accept deposits, one of the biggest implications of that is the cost of funds of an NBFC are always going to be larger than the cost of funds of a bank. Okay, if the cost of fund is higher, what will be the how would you compare the interest rates that both can charge? Suppose I am one customer, okay, and HDFC Bank and IIFL Finance are both chasing me. Which one do you think will be able to give me a better interest rate on my on the loan that I want to take?
HDFC.
Yeah, why is that,
Banks.
Dr.? Yeah, why?
Uh, because IFL will give you higher interest rates since they are funded by loans from other banks.
Which are at higher interest rates, right?
Yeah.
Exactly. So because they have to each make, so that NIM you guys calculate, right? Net interest margin. So that is roughly the difference between the rate at which you lend minus the rate at which you borrow, right? So if both banks and NBFCs have to earn about 4% NIM, you have to add 4% to your cost of funds and lend at that rate, right? So if your cost of fund is 8%, your average rate of lending will be 12% for an NBFC. But for a bank, if your cost of funds is 4%, then you will be able to lend at even at 8%, you will be able to make good NIMs, right? 8-9%. So now, if you guys go back to the databases that you guys have uploaded on Notion, you will see that all the banks have like cost of funds in the range of 4 to 5%. When you guys work on NBFCs, you will see no NBFC has that kind of cost of funds. Minimum will be, I think, 8%, right? So that's the biggest difference, and that's how a NBFC is different from a bank. Clear? Any questions?
No.
Yeah, Gaurav. Yeah,
So, with respect to a bank, say I had a bank's asset was say 100 rupees, right? Out of the 100
yeah,
rupees, they can't really lend 100 for all your advances. They can just
yeah.
lend say
Correct,
75. 25 they have to. I mean these. What is it? I mean they have to
correct.
park it with RBI and all of those things,
They
right?
have to park it with. They have to
Hmm.
park it here in this
Government
bucket
bonds.
roughly.
Correct,
Yeah,
correct.
yeah.
But with respect to NBFC, does the
Hmm.
same I mean conditions also hold? Like if
Yes.
say okay,
The same conditions hold, Gaurav. Like they
also.
also have to have a certain. So you know how the government controls it is actually through look at the liability side. So
Hmm.
this tier one capital and tier two capital, they together make your uh, capital adequacy ratio.
Yeah.
Okay. So when you divide the sum of these two by the total liability, the total of the liability, you get the capital adequacy ratio.
Hmm.
So for a bank, as per the Basel III norms,
Please look up.
Basel III norms, these came into being after
Lehman
the
Brothers, no?
yeah, exactly, the great financial crisis of 2008. So they, one of the biggest things they did is the first thing they did is they said that a percentage of your liability has to be in a capital, right? So
Hmm.
minimum CRAR minimum. So for RBI, for banks, I think I am not exactly sure. So please check these numbers. For banks, I think it is something like 9%.
Hmm.
Like you have to maintain 9% as CRAR. For NBFCs, I think this same number is 12%. I might be
12%.
off. Yeah, I
Okay.
might be off by 1 or 2 percentage points. So just check this once, and I'll get back with the correct figures after the
So,
session.
so my
Yeah,
question then is, what stops a bank to get into the space of a NBFC?
exactly. That's a great question. So that is the logical question that comes to anybody's mind, right?
Hmm.
So see, India is a vast country, okay? And if you look at banking rates means out of the total population, how many people have access to banking?
Hmm.
Banking can mean deposit, being able to deposit your cash, and also being able to make payments and to get loans when needed, right?
Hmm.
So it is one of the worst penetrated middle income or lower income countries in the world.
Right.
Okay.
Yes.
So India is just geographically huge, and the number of good quality banks or large quality banks that we have is just very limited compared to the sheer number of people who are crying out for financial services in
Hmm.
India. Okay.
Hmm. Hmm.
So the biggest reason that these two coexist, Gaurav, is because uh, 10, 12, 20 banks cannot cover entire India,
Correct.
right? So
Yes.
there's India and there's Bharat, right? Like people like to call the two different parts of India like that, right? The
Hmm.
metros and the tier ones are India, and everything else is Bharat. So to give banking to all the MSMEs and the normal citizens in rural areas or in semi-urban areas, you need more organizations, and these are basically NBFCs play there. The second is these NBFCs are used to have some relaxation in norms
Hmm.
in terms of NPAs. Okay,
Hmm.
so like for example, for a bank, as soon as a customer does not pay for 90 days,
Hmm.
you are automatically you have to classify it as NPA.
And
For
then provision for bad loans, right?
and then provision for bad loans. As soon
Right.
as you classify for NPA, you have to provision for bad loans. For NBFCs, the RBI used to have relaxations,
Hmm.
which would say 90 day अगर हो भी गया but अगर same month में उसने pay back कर दिया तो you don't have to classify it as NPA. Okay.
Yeah. Yeah.
Why does the government do that? See, the government wants the NBFC to take more risk and to lend out to people who the banks would otherwise not touch
Yeah.
because of fear of default.
Correct. So if a
Okay.
bank fails, then it's a systemic failure of the financial system. And
Absolutely.
if you're even those Dhan Lakshmi Bank and all failing caused havocs, right?
Absolutely.
But
Absolutely.
NBFCs are like those private parties or chota small organization which can lend. What I'm
Correct.
trying to figure out is,
Yeah.
are there no advantages to an NBFC from a
There are.
policy point of view?
There are. So the biggest
Hmm.
reason that NBFCs exist is because of this, because banks won't lend to a certain sector of customers, because banks are governed by much more tighter norms in terms of, because they accept deposits from common citizens, right? So
Hmm.
their responsibility with the funds is far higher, and because of systemic risk, the government won't let them incur certain NPAs and won't let them lend out to a certain section of the population, right?
Okay.
So the reason NBFCs were brought in was basically to tap into this uh, section of the population which desperately needs credit but is also not as credit worthy. So NBFCs charge higher interest rates to compensate for the risk, and they have higher NPAs. That is the kind of model. So without NBFCs, you would not have the kind of penetration, that credit penetration that you today have. So the other aspect that I haven't spoken about, NBFCs focus on completely different things. They focus on how fast can I process a loan. For example, the gold loan NBFCs,
Hmm.
they are able to turn around. Suppose a poor person comes to them and says, "Okay, I have these earrings. I immediately need 1 lakh cash against it."
Correct.
So a bank will say, "ठीक है, कल आओ." Okay, they'll take 24 hours, 48 hours, whatever. These NBFCs, because they are catering to this section of the population, they know their needs. They will turn around the loan in maybe 2 hours or 3 hours.
Hours.
Yeah.
Yes.
For that, what they will do is they will charge an extra interest of 3%, 4%. But that poor person who desperately needs that cash is willing to pay that extra 3 4%, because anyway that's a short term loan, you know.
Yeah. Yeah.
So maybe he has just cut his crops. As soon as he gets payment for the crops, he'll return the money.
Yes.
For him, what is required is immediate, speed of delivery. So that's one example. Second is, our banks are traditionally, they were technologically very poor, in terms of using machine learning or artificial intelligence and big data to actually add together 5 6 different data points about a customer, whether the customer is a retail customer or a corporate customer. They don't have the maturity of these kind of data systems, especially the public sector banks, to actually be able to accurately calculate the credit worthiness of a customer. NBFCs over time, they have specialized in different areas. So some are gold loan NBFCs, they only give out gold loans. Some are housing finance companies, they only give out housing finance. So they have over time developed great expertise in very narrow areas,
Hmm.
and there they have brought in all kinds of technology and data driven insights. So their ability, so for a bank with less data, they will probably give a loan to only 2 out of 10 of those people. With the NBFCs, with their better data, their better ability to predict cash flows, etc., they are able to give loans to 6 out of 10 people. Of course, the losses are higher compared to a bank, but their interest rates are also higher.
Got it. Okay. Yeah.
So,
Yeah. Yes.
yeah, no, go ahead.
No, so basically a bank, I mean, for example, an HDFC to now further expand to say gold loan or further expand to vehicle loan, I mean, they can just like the merger is happening between say HDFC and HDFC Bank, which is HDFC being an NBFC
Right,
with expertise in say housing finance.
correct.
Now when they come together, what happens? I mean, what is that amalgamation? I know this is forward thinking and even we are curious about it, but
Yeah.
ultimately their cost of capital is from their CASA deposit, and then they are going to give these housing loans at a much higher rate, so their net interest margin would be very large, something like that, right?
Correct. So what they are trying to say, I think their logic was, when HDFC merged with HDFC Bank, the people who are taking loans from HDFC today, they don't bank with HDFC Bank. They have
Hmm.
accounts with ICICI, State Bank, etc.
Hmm.
They want to convert those to fee-paying customers for HDFC Bank.
Hmm.
So that's a huge captive base of customers who can be juiced to buy all HDFC Bank's products. So उनको इंश्योरेंस पकड़ा दो, उनको सेविंग्स अकाउंट खुलवा दो, एक एफडी
Correct.
खुलवा दो.
Correct.
So you mine the customer to get more and more income.
So for an HDFC bank, so if you look at the entire banking ecosystem or the financial ecosystem,
Yeah,
so going forward, say 20, 15, 20 years from now, as things get more digitized, people get into the channels, I mean
yeah,
आधार वाधार इन सब से तो सब कोई digitize हो ही रहा है, सब कोई
right,
channel में आ ही रहा है. So
right.
ultimately there would be a few banks left, and they would probably purchase or they would have good
So
working
already you're
relations.
already you're going in the the right direction, Gaurav. So that is exactly what is happening. So the term for that, there is a term called co-lending.
Co-lending.
Okay.
Okay, yeah,
Yeah,
you told
which
me
I
about
will
that.
cover,
Yeah, yeah.
which I will cover here with an example. So
Anyways,
you're, yeah.
no, let's stop this discussion and you continue with the concept. I was very curious about that part.
Yeah. So but you're driving the discussion in the right direction. So co-lending is actually something that I will discuss, and then when I discuss co-lending, we'll answer your question, Gaurav. This
Yeah,
question
because
that you're asking, right?
my point of view is then good NBFCs will ultimately either turn into banks or
Hmm.
banks will get into the NBFC space. I mean, each bank will
Yeah.
have their own specialized, like HDFC becomes a housing loan, and maybe ICICI becomes a insurance, I mean, a bank plus insurance, something like that.
Yeah, so it's very interesting. We'll discuss that further in the co-lending section. So
Yeah, okay.
actually, that is exactly what is happening today. Some people thought that fintechs will come and take away business from banks. Actually, what is happening is a much more powerful ecosystem is getting built with banks at the heart of it. Think of it as concentric circles. Bank at the heart of it, NBFC a larger concentric circle, and fintechs an even larger concentric circle.
Yeah,
So that's how it's going. We'll come to that.
right, okay.
So yeah. So okay, this is the balance sheet. So now let's go to income statement. Okay. So this is just a refresher course for you guys. Okay, Pranav and Shantanu. So I again want you guys to help me fill up these items in the bank's profit and loss statement. Okay. So item A is interest income. It has two components: interest income from investments and one component which I want from you guys. What is this component? शांतनु, प्रणव, कम से कम जगे हो या
Sorry,
कॉल पे हो, एक ऐसा कुछ आवाज कर दो यार.
sorry, could you please repeat? My net was, I just got disconnected for a
Okay,
second.
cool. I'll repeat. Pranav, are you there?
Yeah, I'm here.
ओके कूल. एक हाँ ना बोल दिया करो यार, ताकि मतलब मैं स्क्रीन नहीं देख रहा हूँ ना, तो मुझे समझ नहीं आता है. सो
Yeah.
शांतनु, व्हाट आई एम सेइंग इज दिस इज द प्रॉफिट एंड लॉस स्टेटमेंट ऑफ अ बैंक.
Okay.
The first item is the interest income, right? How much they are
Ah,
earning from interest. That has
yeah.
two subcomponents. One I've mentioned, interest income from investments. What is the
Ah,
first item?
interest expense.
No. That you're
Sorry,
jump.
the B one would be, I guess, right?
Yeah, B would be interest
Ah,
expense. Okay, I'll fill B then.
be- because that
Interest
formula of net interest income is, I think, interest income minus interest expenses.
expense, correct. Absolutely. So you got this right. What is this? Pranav, ये क्या है? पहला वाला इंटरेस्ट इनकम. इंटरेस्ट कहाँ कहाँ से आ रहा है? एक इन्वेस्टमेंट से आ रहा है, दूसरा कहाँ से आ रहा है?
Advances.
हाँ,
Advances.
एग्जैक्टली. इंटरेस्ट इनकम फ्रॉम एडवांसेस. इनकम फ्रॉम एडवांसेस, एब्सोल्युटली राइट. ठीक है. तो इंटरेस्ट इनकम आया. ठीक है.
हाँ.
अब अदर इनकम क्या होता है? अदर इनकम में क्या क्या आता है?
Mm,
आई नो ये तुम लोग को शायद पता नहीं होगा क्योंकि हमने डिटेल में डिस्कस नहीं किया है, बट व्हाट डू यू थिंक? हर हर बैंक में तुमने पीएनएल स्टेटमेंट में तो देखा होगा ना, एक नेट इंटरेस्ट इनकम आता है, फिर एक अदर इनकम आता है. नोटिस किया है नहीं किया है
yeah,
शांतनु, प्रणव?
ने किया है.
नहीं किया है तो यू कैन से
किया है.
इट, बिकॉज बिकॉज
किया
देन
है.
आई विल स्पेंड टाइम कवरिंग दैट.
किया है, but didn't really look into it. But
Right. So let me cover this in some detail because this is
yeah,
extremely important. So other income is also often called non-funded income. Okay. What does non-funded income mean? The income that you earn not from lending. So
then,
funded means that when you lend funds. Okay. So non-funded income is income that comes to a bank without lending anything. Okay.
yeah.
So कौन से ऐसे इनकम के आइटम्स होते हैं? बैंक और कैसे कमाता होगा? एक तो लोन देता है, और क्या करता है?
No, their products,
Exactly. What kind of
um,
products, Shantanu?
credit cards, debit cards, etc.
Correct. Credit card, debit card. Then if the company has a life insurance arm, okay, HDFC will give out life insurance. It will earn a commission on that. Okay. All kinds of, if you're going to the bank for a loan, they will take a loan processing fee from you.
Even the
Okay.
brokerage and everything
Even
is
the
included.
brokerage. If a bank has
Oh,
a brokerage, then brokerage income, right?
okay.
So all of these things come under other income. The reason it is so powerful, other income, is because it does not depend on how much loan you give out
Huh.
and how much funds you are raising from deposits and other banks in order to give out loans, right? So this one depends on, if you have a customer, how many different products are you able to sell to that one customer. So it's about mining the same customer, you know. So this is very important. So one metric that we did not actually cover, which I should have covered, is other income by total income, this ratio.
Okay.
If this ratio is very high, if it's like 30-40%, or if it's increasing for a bank, if it's increasing, both of these things are very good, because it means you have an existing customer base and the bank is able to squeeze out the maximum juice out of that customer base by cross selling different products to the same customer. Check out the presentation of IDFC First Bank. Okay, there will
Okay.
be a slide in the latest presentation where they have shown how many products are contributing to their other income. It'll be an
Mhm.
interesting slide for you guys. Yeah, Gaurav. Yeah. Uh, 12%. Not really, Gaurav, because. Hmm. Right, right. Hmm. Hmm. Right, 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 right. Absolutely. Right, right. Hmm. Okay, okay. Hmm, 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 hmm. So that's a good point, Gaurav. I've never thought about this. So, see, at the end of the day, let's separate two different things. One is how assessing how risky Gaurav is as a customer and fixing an interest rate for that. Okay, so maybe they have assessed and they have discovered that okay, 11% is the right interest rate for to charge this customer. Okay, now to make sure that you convert to that bank and don't go shopping to another bank, if they structure it in a way that the loan rate is 10%, but that 1% over the life of the loan they will capture right away through processing fees, then from a risk approach they are not doing anything wrong. Okay, so that is the answer probably to the risk part of the question. Are they taking extra risk? As long as they are getting compensated fairly for the risk that you as a customer carry, whether it is by interest income or by fee income, it does not really matter. Okay, so that is a pure from a underwriting perspective. Now from using the fee income or other income to judge whether the bank is doing very well, so in this case the fee income will be unnecessarily inflated, right? Because it should have, otherwise actually the income should have gone to interest income, but it's coming to fee income because of the way they have structured it. So a company, if it is doing this repeatedly with a lot of loans, they will have a very high this ratio, other income by total income. And if you're using this as a one of your high weightage ratios to assess a bank, then you may falsely come to the conclusion that okay, this bank is doing extremely well in terms of fee income. But it's a little difficult, Gaurav, because your net interest income will suffer because your interest income drops off, your NIM drops off, right? So the banks, so one metric will improve, but a far more important metric will become worse. Yeah. 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 Right. Absolutely. Right. No, so underwriting, Gaurav, the way you should look at underwriting is only NPAs. You don't look at anything else. Okay. So for example, so see, there are different ways to generate returns for a bank. Okay. The ultimate number that you're going to track is going to be ROE. Okay. So this ROE will have a net income divided by equity, right? So whether yeah, so this will be sort of the formula, right? So whether you lend to riskier customers, as a result of which your interest income is very high. Okay, this is one model. Say the IDFC first model. Okay, they will pick up riskier customers. They will charge a higher interest rate, and here in this item, I will not reveal this item, but they will take higher hits on their balance on their PNL, and then they will. So this higher hit is due to this their nature of lending to riskier customers. So ultimately, your PAT, you cannot game the PAT. Either you lend very conservatively. In that case, you will not have hits here, but your interest income itself will be low, or you risk in a lend in a risky fashion, but then you have to manage your NPAs. Otherwise, see, ultimate number is ROE. If your ROE is good, then it doesn't matter. You may be able to lend to riskier customers, but you're charging enough of an interest and collecting enough money from those customers to justify higher NPAs. So it doesn't matter. Market won't punish you. Yeah, yeah, yeah. Yeah, yeah, absolutely. Absolutely. So, which is why, Gaurav, the experienced bank analysts, they say that you should not get enamored by high loan growth. The only reliable indicator of a bank's quality is the management quality over cycles. If you're looking at a bank, if you want to own a bank for 10 years, the only factor you should look at is management quality. Now, there are different ways to play a banking cycle. Okay. See, when there is an upcycle in a sector, the shittiest companies in that sector actually give the highest returns, right? But if you're not an aware investor and you think कि अरे यार ये कौन सा बैंक का नाम लूं मैं एसबीआई तो हाँ पीएनबी ले लो ये पीएनबी तो जबरदस्त बैंक है यार खतरनाक लोन ग्रोथ है इतना अच्छा प्रॉफिट दे रहा है प्रॉफिट 200% बढ़ गया मैं इसको ओन करूंगा और एक दिन करोड़पति बन जाऊंगा तो तुम रास्ते पे आ जाओगे जल्दी ठीक है बिकॉज in an upcycle the people who know when to exit before the NPAs come they make money. Otherwise, if you want to reliably make money, Gaurav, you have to stay with a bank where the management is top grade, like Kotak, HDFC, ICICI, etc. Yeah. Yeah, yeah, yeah. Yeah. Actually, I should not say ICICI, maybe Kotak, HDFC. Yeah. 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 Right. Yeah. Yeah. Right. Guys, if you have any questions, please feel free to ask. Yeah. It need not be related to these equations. So you can ask anything like just like Gaurav is asking.
Yeah.
So, okay, so these, okay. So then you have other income. So I just filled this up. This should have been a yellow. So fee income, okay. Fee income is one component. The other component is co-lending income. I will come to this later, what co-lending income is. So then you have other income and you have net interest income. You add C and D, you get E, okay.
Mm.
I'll just put the formula here. E equal to C plus D, okay. So you get total income. Okay, before we come to F, can you tell me what PPOP is? Have you guys come across this term?
No, but
No.
profit something.
Yeah, it's not profit something. It's
Oh,
pre-provisioning operating profit. Okay. Pre-provisioning operating profit, which means the operating profit before provisions are taken into account. It's
Okay.
like EBITDA for a bank. Okay. So now you have total income here.
Yeah.
Now from total income, if you have to go to pre-provisioning operating profit, okay, so it means when you reach PPOP, you have not subtracted the provisions
Hmm.
because it's pre-provisioning. So what item will you subtract here to reach PPOP? So right now we
Total.
have, yeah, go ahead.
No, total expenses.
Absolutely. So not total expenses, Shantanu, it's operating expenses
Okay, sorry. Operating.
because total expenses will have even provisions in it, right?
Oh, yeah.
So operating expenses are the expenses of running the branches, paying your salaries, yeah, your software costs, your tech stack cost, etc., etc. Yeah. So you from total income you remove the operating expenses, you get PPOP. So what is the cost to income formula? आप लोग 20 बैंक के लिए भरे हो ये वाला फॉर्मूला तो मेरे को करेक्टली बताना ही पड़ेगा. कॉस्ट टू इनकम रेशियो का फॉर्मूला क्या है?
Total provision. No, wait, no.
Operating expenses
Ah,
upon
हाँ,
interest expanded.
नहीं, न्यूमरेटर सही है प्रणव. इट इज ऑपेक्स बाय टोटल इनकम.
income. Okay.
मतलब जितना तुम कमा रहे हो उसका कितना परसेंट तुम ऑपरेट करने के एक्सपेंसेस में उसको निकाल रहे हो. तो कॉस्ट टू इनकम रेशियो इफ इट इज 100%, इट मींस जितना कमा रहे हो सारा तुम्हारा ऑपरेटिंग एक्सपेंस ही खा जा रहा है. उसके बाद प्रोविजन जो होगा वो तुमको लॉस क्रिएट करेगा. ठीक है.
Yeah.
So if it is 40%, it means after your operating expenses, you have 60% of your total income still left. उसमें
Hmm.
से provision subtract करोगे तब profit before tax आएगा. ठीक है. तो you know what I'm hoping is ये वीडियो रिकॉर्ड हो रहा है guys. ठीक है. तो तुम लोग बाद में एक बार जब तुमने जो काम किया है ना बैंक्स पे जितने सारे पैरामीटर्स भरे हैं उन सबको अगर तुम्हें कहीं पे डाउट आ रहा है कि ये फॉर्मूला तो मैं कैप्चर कर रहा हूँ प्रेजेंटेशन देख देख के लेकिन मुझे समझ नहीं आ रहा है तो प्लीज रेफर बैक टू दिस वीडियो और गेट इन टच विद मी. ठीक है. सी दैट इज द इंटेंट ऑफ डूइंग दीज सेशंस राइट. लास्ट वाला अनफॉर्चुनेटली रिकॉर्ड नहीं हो पाया बट प्लीज डू दैट सो दैट कॉस्ट टू इनकम रेशियो यू नो हाउ टू नो व्हाट द फॉर्मूला इज बट यू शुड इंटुइटिवली ऑल्सो अंडरस्टैंड कि उसका मतलब क्या है वो कैलकुलेट कैसे होता है. ठीक है. तो यहाँ पे इट इज प्रोविजंस एंड राइट ऑफ्स. तो पीपीओपी से प्रोविजंस माइनस करोगे तो प्रॉफिट बिफोर टैक्स आएगा. इसमें से टैक्स माइनस करोगे तो पैट आएगा. दिस इज द एंटायर प्रॉफिट एंड लॉस स्टेटमेंट फॉर द बैंक. दिस वी हैव ऑलरेडी सीन. दिस वाज जस्ट अ रिफ्रेशर. ठीक है. अब मैं अपने इस पे वापस जाता हूँ. तो बैंक बैलेंस शीट हो गया, ये हो गया, डिफरेंस मैंने बता दिया. अच्छा, एक टेक्निकल चीज बताना है कि देर आर सम एनबीएफसीज विच आर अलाउड टू टेक डिपॉजिट्स. ओके, दे आर कॉल्ड डिपॉजिट टेकिंग एनबीएफसीज.
Okay.
So when an NBFC becomes very large and almost as important as a bank, the RBI sometimes allows them to take uh, deposits, but not savings accounts or current accounts, only FDs, only term deposits. Can you guys name one NBFC जो deposit लेता है?
Hmm.
गौरव पता है?
Bench?
Yeah, exactly. Bajaj Finance. So Bajaj Finance is one. Bajaj Finance सुना है क्या तुम लोगों ने? प्रणव, शांतनु,
हाँ.
प्रणव सुना है?
Sorry, my connection थोड़ा
नो
poor
वरीज.
था. Can you
मैं
repeat the
पूछ रहा था
question?
बजाज फाइनेंस के बारे में सुना है तुमने? कभी नाम सुना है?
हाँ हाँ, yes yes.
Okay. So Bajaj Finance is one NBFC which is allowed to take deposits. Okay. Otherwise, very few NBFCs are there like this. I think only 3 or 4 NBFCs. Yeah. So this is just one small point that I wanted to make. So in this balance sheet, so they will take loans from banks, but they will also be allowed to take term deposits. So this is only like 5, 6 NBFCs out of the entire universe of maybe 100 plus. Okay. And now let's look at the types of.
Does their interest rate also differ from other NBFCs which are not allowed
Uh,
to
देखो
deposit?
डिपेंड करता है. अच्छा, इंटरेस्ट रेट शांतनु कैसे फिक्स होता है? इंटरेस्ट रेट जैसे तुम एक बैंक को अगर अपने पैसे दे रहे हो, तुम्हें फिक्स डिपॉजिट में पैसे रखने हैं, राइट?
हाँ
तो एक बैंक अपना इंटरेस्ट रेट किस तरह से सेट करेगा? जस्ट कॉमन लॉजिक से बताओ तुम, कि एक ओपन मार्केट है, राइट? तुम एक कस्टमर हो, तुम्हारे लिए सारे बैंक्स compete कर रहे हैं,
या
तो they will set their interest rates according to their ability to attract you, right?
या
if I am an HDFC, I have built such a brand name over decades, and मेरे
हाँ
पे इतना ट्रस्ट है कि, या SBI हूँ अगर मैं, पीपल नो कि सरकार मेरे पीछे है, इवन इफ आई लूज मनी, गवर्नमेंट विल नेवर लेट एनी ऑफ द फंड्स
या
fail. So the trust in that is huge. So it means I can afford to offer a less interest rate. People will still park money with them because they are sure कि ये पैसा कहीं जाएगा नहीं,
ओके
right? Now NBFC में, naturally, because they have a shorter history, right? NBFCs
हाँ
are, I think, 20 years old, and they are more risky in the sense that government doesn't protect them directly.
या
So most NBFCs will have to pay out a higher interest rate to attract customers. But gradually, Bajaj Finance is one NBFC which has become so huge, and it has done so well, and RBI is starting to show such confidence in it, that Bajaj Finance may be able to charge rates which are higher than banks but still closer to them.
ओके
So that's the answer to your question, Shantanu. Basically, it's a factor of trust.
या
अब naturally NBFCs का trust थोड़ा कम होगा compared to banks, so their interest rates will generally be high.
यस
Okay. So, but लोग हमेशा high interest rate देके रखेंगे भी नहीं, because they have this in the back of their mind कि यार there's a 10% possibility, कल ये बैंक fail हो गया तो मेरा पैसा चला गया तो क्या
हाँ
होगा, right? So types of NBFCs, okay? So there are different types of NBFCs. Like I was explaining to Gaurav when he asked that question, NBFCs generally try to specialize in a particular area, okay? So for example, you have housing finance NBFCs. हाउसिंग फाइनेंस एनबीएफसी में एक एनबीएफसी का नाम है, मान लो कैनफिन, कैनफिन होम्स, ये कैनरा बैंक का एनबीएफसी है, ठीक है? कैनरा बैंक ओन्स अ लार्ज पार्ट ऑफ दिस एनबीएफसी. इसके अलावा यू हैव कंपनीज लाइक आवाज फाइनेंसियर्स, या इसके अलावा ऑब्वियसली एचडीएफसी, राइट? एचडीएफसी इज द लार्जेस्ट आई थिंक हाउसिंग फाइनेंस कंपनी इन इंडिया. तो ये हाउसिंग फाइनेंस कंपनीज. देन यू हैव कंपनीज कॉल्ड माइक्रो फाइनेंस एनबीएफसीज. व्हाट दे डू इज, आर यू गाइज अवेयर ऑफ सेल्फ हेल्प ग्रुप्स? जो
या
विमेन सेल्फ हेल्प ग्रुप्स बनते हैं ना विलेजेस में.
या
So they are basically 4 or 5 women
Yeah.
who come together, and they are given joint loans, joint liability loans of say 1 lakh or 50,000. Joint liability का मतलब है लोन पूरे ग्रुप को दिया जाता है, एंड द एंटायर ग्रुप जॉइंटली टेक्स रिस्पॉन्सिबिलिटी फॉर गिविंग बैक दैट लोन. ओके, सो दिस one example is 5 Star Finance. Okay, 5 Star is a company which did an IPO last year, I think. So they are into this space. Bandhan Bank, now it's a bank. Earlier it used to be NBFC. So they used to be in this microfinance space. Then you have a lot of other companies. I am actually not well versed with the microfinance universe, so I can't come up with more examples. But you guys can Google this. MSME finance में I am invested in this company called Ugro Capital. Okay, so MSME का full form पता है किसी को?
मीडियम साइज हाँ
Yeah,
मीडियम साइज
Medium
बिजनेस.
is
correct. Medium
small
and
and
स्मॉल एंड मीडियम एंटरप्राइजेस, करेक्ट. एसएमई भी बोलते हैं, एमएसएमई भी बोलते हैं. तो बेसिकली पीपल हु से रन बिजनेसेस जिसका साल में 1 करोड़ का रेवेन्यू है या 50 लाख का रेवेन्यू है, तो दे कम इन वेरियस साइजेस, बट दे आर बेसिकली योर लोकल बिजनेसमैन, यू नो. सो this space is getting a lot of attention and care from the government, because traditionally इनको कोई लोन देता नहीं था. So now the government is trying to make sure that these people get loans. Uh, Try to understand how this has changed. Huh? Earlier, your grocery shop owner, मान लो 5 साल पहले या 10 साल पहले, वो तुमसे कैश लेता था, राइट? और
हाँ
कोई रिसीट नहीं देता था, राइट?
नो
नाउ मोर एंड मोर व्हाट इज हैपनिंग इज वी आर ऑल सेइंग कि नहीं, हमें फोन पे या पेटीएम से पैसे देने, राइट? So all that paisa, when it goes to his bank account, that is getting tracked, right? So what is happening is more and more business is getting formal. Formal means non-cash. So as soon as that is happening, the government is able to track it. These NBFC companies are able to track it, and they are able to determine over a year how much does this guy actually earn and what are his expenses. Because when he's paying to his vendor, also he's paying either through a bank account or through UPI, etc. So these numbers, पहले क्या होता था ना, numbers trust पे चलते थे. Like a shopkeeper would want a loan, but he would approach an NBFC. NBFC would say, okay, show us your books, like your accounting books. He would say, sir, मेरा तो पूरा कैश का धंधा है. तो NBFC would say, sorry sir, मैं तो आपको फिर लोन नहीं दे सकता. आप एक काम करो सर, आपके पास प्रॉपर्टी है क्या? अगर प्रॉपर्टी है तो आप प्रॉपर्टी गिरवी रख दो, मैं उसके अगेंस्ट आपको लोन देता हूँ. तो एवरी MSME लोन यूज टू कन्वर्ट into a loan against property. Now what is happening with the advent of this data being available, with GST coming in, with UPI coming in, this loan against property is getting converted to cash flow based lending. Cash flow based lending means an NBFC is able to assess the cash flow of a business by checking its records, and it is able to lend basis that cash flow. कि अच्छा तू साल में 2 करोड़ का बिजनेस करता है, तेरा खर्चा 1 करोड़ है, तेरा साल का प्रॉफिट 1 करोड़ है, तो मैं तेरे को 50 लाख का लोन दे सकता हूँ विदाउट वरी, राइट? So this is the technological change, Gaurav. So this is what is happening now in the ecosystem.
So another thing is budget में जो आया है, so companies who are taking loans from NBFC, from MSMEs, if they are not paying them in a certain duration, they can't even put it in their expenses.
Yeah, absolutely. So earlier they had, so government is taking a lot of steps to make sure that MSMEs get the required capital, you know. Earlier these guys were excluded from the credit system. So this is one reason why I'm very bullish on companies like Ugro Capital, because they are in the right space where government is giving a lot of attention. Okay, then you have transport finance companies. They help you buy personal cars, or जो truck owners होते हैं उनके लिए they finance trucks and stuff like that. Okay, so Shriram Transport Finance is the largest company in this space. Then you have gold loan NBFCs. So the example that I gave, the biggest names here are Muthoot, and then you have Manappuram, etc. Then you have these all-rounders, okay, general NBFCs like IIFL Finance, Bajaj Finance, companies like this. So they play in all these segments. Okay. So they have reached a stage of maturity where they can now give loans in all these sectors. Okay. So these are the types of NBFCs.
Also, Revan, there is some geographical connotation also, isn't it?
Absolutely. Yeah. Go ahead. You finish it.
Yeah,
Yeah.
shall we also capture that at some point, geography wise? It would be good to see a holistic list of say NBFCs above a certain capital,
Yeah.
and
Yeah.
then
Sure.
in which geographies do they operate, even if it is unlisted.
Yeah. I mean, unlisted would be difficult, Gaurav. I say first, if we can even cover the listed universe, because there are a lot of NBFCs. I think I said 100, there could be more than 100. So, if so, you're right, because NBFCs, the like I was explaining, their value proposition is going deep, right? Their value proposition is not in spreading themselves across 20 states. So they will always have more capability than a bank in a particular geographical area because of their long history in that area. So you're right. So it will be interesting to map
The
this.
second thing is it also gives you a temperature check of certain regions or a certain type of economy. Say for example,
Yeah.
NBFCs which gives gold loans, they typically would be like my I was telling you the story about my maid, right? Who
Yeah.
took a
Yeah.
gold loan from this kind of thing.
Right. Yeah, so gold loan is a very common practice in the south of India because a lot of South Indian families believe in gold as wealth, right? So even like people from the lower income strata, whatever during marriage, etc., they get exchange a lot of gold. So gold finance is very popular in South India. Yeah, so that will be interesting. Yeah, right. So the last item, I am aware that we are already at 1 hour, so I'll just quickly finish this in 5-10 minutes. Is a very interesting thing called co-lending. Okay, so this is a little complicated, or maybe it's not complicated. I actually haven't thought about how to explain this, so if I'm a little clumsy, please bear with me. I'll try to explain. So co-lending, okay, so what co-lending means is suppose I'm an NBFC. Okay, suppose I am customer A. Maybe there's a customer, and I am an NBFC. I want to give a loan to this customer, say a 100 rupee loan. Okay. And I have assessed this customer's ability to pay, etc. And I have decided that this loan should be given at 16% per annum. Okay. So this is the loan amount. Let me write everything clearly so that in the video you guys can understand later. This is the loan amount. This is the interest rate. So this is what I want to give. Okay. Now, what co-lending? So if I have to give this loan as an NBFC, I need to raise 100 rupees of deposits. Am I right or am I wrong, Shantanu Pranam?
Yes. Sorry.
Yeah, either 100 rupees or maybe more than 100 rupees, right? Because I can't give out every rupee I loan out. So I will have to raise deposits. Now we discussed here that raising deposits for an NBFC is not as easy as raising deposits for a bank, right? Because bank has access to deposits, whereas NBFC doesn't have access to deposits. It has to depend on loans. Guys, there's somebody at the door. Can you just give me 30 seconds?
Yeah, sure.
Yeah, sure.
Yeah, sorry. So, sorry, yeah. So basically, the NBFC, in order to give out any loan, obviously the NBFC has to raise the same amount in deposits, right? And deposit raising for an NBFC can be a little tough because it has to either, issue bonds or it has to go out to a bank and ask for a loan. So just like you and me as customers have to apply for a loan and wait for the bank to sanction the loan, NBFC also has to go through that same process. So it's not very easy. So what I'm trying to say is for an NBFC to grow, the constraint is raising deposits. So that is the constraint for its growth. It has plenty of customers that it can give loans to, but it is constrained by the amount of capital it can raise. Yeah. So co-lending is basically a way around that. Co-lending is a marriage of NBFC and banks. You know, NBFC is hungry to grow, but it does not have the capital to grow. It is difficult for it to raise capital. A bank is sitting on easy capital because you, me, Gaurav, everybody is going and parking our savings with the banks. But the bank is not able to reach every corner of India. Yeah, it does not want to increase its book by just lending thousands of crores to Adani so that tomorrow Adani fails and the bank also fails, right? It wants to lend in smaller ticket sizes so that the risk is more distributed. Okay. So co-lending is a way to marry these two requirements, these two interdependencies, right? So in co-lending, what happens is, suppose an NBFC makes this kind of a loan, okay? Then suppose this NBFC, let us call this IIFL because this is my favorite NBFC right now, and let us look at a bank which is say, so IIFL has a tie-up with SBI. So let's think of this. This is SBI, okay? So what IFL says is, boss, I have this customer. Uh, According to my credit calculation, he's a credit-worthy customer. I have a 100 rupee loan for which I will earn 16%. Are you interested in taking a part of this loan? Okay. So the bank will often say that yes, I'm interested. Why? One, because it has excess capital and it does not have enough manpower to go and hunt for loans. Second, there is a requirement for banks called priority sector lending. Okay, which means it has to lend to certain sectors, certain rural populations, etc. So if it gives out 100 rupees in loans, 40 rupees has to go to the priority sector. And it is difficult for a bank like SBI or HDFC to source 40% directly because These are mostly in rural areas where it may not have so many branches. Whereas the 100 NBFCs of the country, they are present in every geography together, not individually. Together, they cover every geography.
Yeah.
So suppose this NBFC is sitting in Gujarat, in some remote area in Khar near the Pakistan border. It has sourced this loan. It has come to an SBI. Yeah. So what happens is SBI says ठीक है, ये जो तुमने 100 रुपये का लोन लिया है, इसमें से मैं 80 रुपीज अपने बुक्स में ले लेता हूँ. Out of the 100, you sell 80 rupees of the loan to me. Yeah. And for this 80 rupee loan, you can charge, I will pay you an interest rate of, say, no, sorry, I will charge you an interest rate of, say, 12%. So the NBFC is earning 16% from the customer, but the bank is saying that I don't need 16%. I am happy with 12%. This 16%, this 4% is your fee for going and hunting the customer and bringing it to me. Of course, before taking the loan, the bank will do its own credit check. Only when it is satisfied that this is a credit worthy customer will it accept this loan. Okay. So suppose this happens. Now what happens for the NBFC's balance sheet? Yeah. So out of the 100 loan, 80 has been sold already, right? So it is out of its balance sheet. So
Yeah.
how much of the loan is remaining? 20, right?
20.
Yeah. And let us now calculate the interest that this NBFC earns. Yeah. So interest rate, interest. Okay. How much will this guy earn? It has given a loan of 100 to the customer. Let's think of the customer and NBFC linkage. Okay. NBFC and customer. Loan of 100 has been given to the customer at 16% per annum. So how much will the NBFC collect from the customer?
16 rupees.
16 rupees. So it will collect 16 rupees. Okay. Out of that, 80 rupee loan is sitting on the books of SBI, for which SBI is going to charge 12%. So how much will SBI get out of the 16 rupees?
9.6.
Absolutely. My 80 into 12%, which is nothing but 9.6. So how much will this guy earn? 6.4, right?
Yes.
So if you calculate the ROE for this NBFC, it is able to earn 6.4 rupees by only keeping 20 rupees on its balance sheet. An ROE of 32%. Yeah.
Yes.
So what is happening is for this 20 rupee on its books, so this 6.4 can also be split in this way. For the 20 rupee on its books, it is keeping the entire 16%. So 16% into 20 rupees. Plus for this 80 rupees, it is keeping the 16 minus 12, 4% differential. Right?
Yeah.
Because it is collecting 16% but only paying out. This is how you arrive at the 6.4. So not only is it earning for whatever is on its book, it is also earning a fee which goes here as co-lending fee. It comes in other income as co-lending income for actually the loan that is sitting on the bank's balance sheet. Suppose it was not doing this, scenario, and it was loaning out 100 and earning a 16% interest rate and keeping the entire loan on its books. So how much would be the interest?
16.
16. And how much would be the ROE?
16 by 100.
Yes, which is 16%.
16%.
The ROE gets doubled. Can you see this?
Yeah.
ROE gets doubled, so obviously the NBFC is gaining. SBI also is happy to do this because it has to meet its priority sector lending targets. Plus, it is able to source a customer at an adequate interest rate. It does
Oh.
not need to earn more than 12% interest rate on this.
Wow.
So it's a win-win situation. So this co-lending is a construct that the RBI came up with, I think, very recently in the last 6-7 years, and co-lending has really started in a serious manner only from last year. So now this model is going to catch on fire if nothing unexpected happens, which I can't see at least at this moment. So this is how NBFCs and banks will grow. NBFCs will go out, source loans, and they will park 80% of the loans with the banks. So the banks keep growing, the NBFC keeps growing, and the NBFC's ROE really rockets. So there are companies like IFL Finance and Ugro Capital which are focusing completely on co-lending, to increase their ROE and basically build out this ecosystem. So any questions on co-lending? I think this will take a little bit of time for you guys to absorb. So I'm glad the video is getting recorded.
Yeah,
Play back, this part and just check out the math again and do it again. I had also made a value picker post on this. I will send the link of that post on WhatsApp. So
sure.
that explains in written form exactly what I explained here. So yeah. Yeah, Gaurav, any questions?
So for me, it's very interesting because as these ecosystems progress, a bank, I mean, so say for example, I'm a customer and I've taken a loan for 2 years, and I have over the last 1 year paid up a lot of the interest and principal. So I actually kind of build a credit.
Yeah,
I mean,
credit profile.
credit profile with the NBFC. So, if the number of customers actually grow, this NBFC can actually probably negotiate with larger banks who would
Yeah,
probably hunt this priority sector lending, which is also a pain for them. So,
yeah,
I don't see them charging even more. I mean, like SBI can probably charge 10% or something like that, and then
yeah,
that
yeah,
will
yeah,
add it
yeah.
up. Yeah.
Absolutely. So a lot of
Yeah.
people thought that this would put NBFCs and banks in competition,
Hmm.
but RBI did not come up with this policy to do that. It came up to increase collaboration between these two.
So,
So
Nirvan, one
yeah,
thing, if you change the interest rate, I wanted to see how much does it differ. I mean, if you change it
yeah.
to 11% once, the
Which interest rate?
SBI wala.
Okay, okay.
So, what is the number then that comes up to? I think, acha, there's no equation.
No,
So,
no, no. I actually, yeah,
Point one.
I hard coded this.
that would be very interesting. So, a little bit improvement, I
Yeah,
think that would act as a leverage, in my opinion.
yeah. It will. 30, it goes up to 36%.
So
Nice.
basically 4% again jump. So that's
Yeah, yeah.
immense, right? Isn't
That's a
it?
10% jump. Yeah,
A
from
10%
32 to
jump.
36. Yeah,
Yeah, exactly. So the more I think, I mean, co-lending companies who go into such segments and create larger customer base, they can probably auction off their customers to bigger
yeah.
banks.
So that is already happening. So
Hmm.
IFL Finance is the leader in this space, I would say, in terms of the amount of co-lending disbursement they are doing.
Hmm.
And Ugro, the entire business model is based on this. So Ugro plans to have a 20,000 crore loan book by
Hmm.
2025, out of which 10,000 crore will be co-lending. So on its balance sheet, you can only see 10,000 crore, but the income will be for 20,000 crore.
Right.
So for this, now it might seem very easy. Why are not all NBFCs doing this?
Hmm.
So the reason not everybody is doing this is because the bank has to have trust on your credit appraisal system, the way that you evaluate the credit worthiness of a customer. If you're able to establish, and that takes work, you have to integrate with the bank. So this is now an automatic process. As soon as IFL raises a loan on the IT system, it goes to SBI's IT system and automatically gets validated, and you get a yes or no decision that okay, we can accept this co-lending customer or we cannot accept. And this integration, this joint planning takes time and effort. Some NBFCs, visionary NBFCs, have gone ahead and done this. Others have not thought about this. So the ones that have gone ahead and done this will have a head start of 4 or 5 years, and they'll make a killing. Is what my
Hmm.
hypothesis is. Yeah.
Yeah, this could be as powerful as a Bajaj Finance, in my opinion.
Yeah. Yeah, absolutely. So this is very interesting because for India to become a developed country, you need its small businessmen, it's
Hmm.
the common people to get access to credit, right?
Hmm. Hmm.
Only people like us getting credit will not really take India to where we want to be.
Yeah, exactly. My
So
maid, for example, takes loan at ridiculous rates and
exactly.
and gives out interest whatever she earns. and she
Right.
doesn't even know what to do with the money, so she ends up spending it, and then she's kind of stuck in that loan cycle. So
Right. Yeah, absolutely. So
nice.
yeah, that was the session. So what I'll do is on Notion, Shantanu and Pranav, I'll upload